Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going over the latest news updates for SoFi Technologies. We'll be analyzing 3 different new news articles that are titled, Buckle Up, SoFi Approaches a Significant Crossroad. So we'll be going over their latest projections as well as their latest price targets among professionals and what we as investors can expect from their upcoming earnings report. After that, we will be looking at key performance indicators on where the SoFi trajectory will be headed in terms of their overall share price so investors can stay informed. And then finally, we will be going over once again the actual EPS and earnings per share as well as their revenues, which SoFi should bring in for their earnings report. And if they don't bring in anything substantially close to these metrics, then we can anticipate that the share price will most likely drop. But honestly, we could have a pretty great earnings report come out on January 30th. So for more stock news updates on SoFi Technologies, don't forget to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into it. SoFi Technologies, if you didn't know, essentially operates as a digital bank, and right now they trade for just $5.72 per share, while professionals think that they are worth as a company anywhere between $5 on the low end and $10 on the high end over the next 12 months. Recently, we actually know that the SoFi share price has increased by around 20%, so clearly investors seem to be very bullish in regards to SoFi's future share price trajectory. On top of that, we're going to determine their overall forecast of their future share price on whether or not the stock price will keep running up after their earnings report, or if they could potentially retest or reset their share price back to their lows between $3 to $4. Next, we're going to go over our expectations for their earnings report and what they could potentially bring in according to this article, and I will compare and contrast this to a more positive bullish article when we close out this video. So we're going to be given 2 different forecasts for their upcoming earnings report. And then lastly, we're going to anticipate what to expect in terms of their growth regarding their technology platform segment and how their financial services segment could continue to lose money in the short term. Let's start off with why so many investors are bullish on SoFi Technologies as of late, because back in November until right now, the share price has appreciated around 20% for the SoFi share price. If you are a swing trader, you've already made a pretty penny off of this company. And right now, SoFi is attracting a lot of attention right before their earnings report from both long-term and short-term investors. For me personally, I am a longer-term investor, and I don't anticipate that this company will pay off for me until the end of 2024, which is when this company is forecasted to become profitable. In the meantime, I'm just trying to get these shares as cheap as possible without over-allocating myself more than a 5% initial allocation. Right now, I have around a 4% allocation, and I don't intend to add to my position until or if this company drops below around $4, or at least $4.50. So clearly, there's a ton of volatility, and no one truly knows where the share price is headed in the future. But let's look at what the data is saying, because right now, SoFi Technologies has met a crossroads in terms of where the future share price is headed. Because like we said before, the share price could either continue its very bullish positive trend or absolutely have a reversal and retest and reset their share price to where the share price falls back to its lows. And unfortunately, we don't know where the share price is going, and that's why this crossroad is so important, because we as investors need to prepare for both scenarios. And their upcoming earnings report, which is scheduled for the end of the month, January 30th, is going to tell investors where the future share price is headed. This earnings report will impact the stock's overall trajectory and future guidance, especially since investors are very concerned that the economy could enter into a mild recession. But from what I've heard, many banks have already prepared themselves to go through a mild recession, and that would include SoFi Technologies. So let's talk about their Q4 headlines and results, and as well as their future forecasts. So really right now, we want to gauge SoFi's ongoing ability to attract new deposits and customers. The more customers they acquire, the higher their deposits and products will go, and this will reflect very positively positively in their overall revenues. We also want to pay strict attention to the amount of delinquencies that they could take on from any of their lending products. So if they have a lot of delinquencies due to people not being able to pay any of their loans back to SoFi Technologies, this is going to hurt the company pretty substantially. However, I don't think this is going to be a problem for SoFi for two main reasons. The first reason is that SoFi tends to attract young high earners that make well over six figures and can clearly pay off their debts even if the economy enters a mild recession. The second reason is that SoFi's underwriting policies are pretty top-notch in the sense of they're not going to be giving out any risky loans. The people they give their loans out to and lend money to are people who are anticipated to pay these loans back. So the risk of these types of high earners becoming delinquent on their overall loans is highly unlikely even during an economic downtrend or a recession. So honestly, I think SoFi is pretty good in that regard. Now, what's interesting to me is that this author believes that their quarter four top of the line forecast will be between 400 and 410 million. This is actually pretty low, and if the company brings in around 400 to 410 million, I think the share price most certainly will actually drop. I don't think that is meeting expectations. I think them bringing in 400 to 410 million clearly is below expectation right now. Now, where I do agree with this author is in terms of their earnings per share, to where the author anticipates that their earnings per share, also known as EPS, will improve as the years go on. And of course it's going to improve because they're still forecasted to become profitable by the end of 2024. So clearly they would have to continuously improve their EPS until 2024 once they become profitable on a GAAP basis. I also want to highlight that SoFi is enjoying very strong margins on their overall loans, and with the low amount of delinquencies that they have, I think this will push them further toward profitability, thus increasing the overall share price and momentum of the stock overall. On top of that, we also want to see what management's guidance will be, both in their high revenue and high adjusted EBITDA for quarter one of 2023. If we get very good projections and forecasts from management for 2021, we could see the overall share price rally, and I think that is phenomenal news. Now, some negative bearish news would be that the student loan moratorium is still being extended again. We have more policies coming in that are not favorable to investors. I covered this in the last video, so if you want a very bearish negative look on SoFi, go ahead and check that video out. However, in the long run, eventually the student loan moratorium will end, and that will act as a phenomenal catalyst once it does end to add fury and fire behind the share price, causing it to increase. Now, as of right now, we don't know officially when that will be, but we do know it's most likely going to be this year, which is going to help the company out tremendously. The catalyst, which is going to cause their share price to increase for this year, will be the student loan moratorium ending, and then in 2024, the year after this year, that's when they become profitable, again, a phenomenal catalyst. I also want to highlight that SoFi Technologies' tech platform is growing, and SoFi is investing into it very heavily, and this is going to be a critical source of their future revenues. But not only their revenues, this company is growing their revenues in their technology platform segment, but this is also saving the company money. The cost savings from this segment is absolutely amazing. So not only are they bringing in money for the company, this particular technology platform segment, which combines both their Galileo platform as well as their Technisys platform, is saving the company loads of money. And this is a technological competitive advantage that not many other fintech or legacy banks have. With that being said, what is the financial services segment of this company look like for quarter four? Well, honestly, we think the losses are actually going to increase in terms of their overall financial services segment, and I'm not alone in this because this author agrees. He says, we can expect SoFi to be preparing for a mild recession, and that's exactly what they should be doing. And clearly, this would mean that they need to increase their overall reserves, which is going to weigh on their overall earnings and profitability, particularly in regards to that particular segment. The final thoughts that the author has is that the recent rally in technology and growth stocks has increased the share price of Palantir Technologies by around 20% since November. However, we don't know how long this momentum will actually last. This is going to be highly dependent on the macroeconomic economy as well as their upcoming earnings report. And this means investors need to be confident in the company they are investing into, and hopefully they understand this company, that it's not going to pay off quickly. It's most likely going to pay off after 2024 once the company becomes profitable, but that's just my personal opinion. Up next, we have another phenomenal additional article that is going to highlight the 7 key performance indicators that we should be tracking and looking forward to as their next earnings report is released. And the first key performance indicator is going to be their overall member growth, and this is absolutely huge. The reason why we want to keep an eye on this is that the CEO of SoFi Technologies said that they are targeting around 400 new members each quarter, particularly with a focus on member quality. Just like we said in the first article, this member quality is going to allow SoFi to sustain themselves even during a recession, because if they bring in high quality members, these members are not likely to default on any of their loans or any of the products or services that they are gaining from SoFi Technologies. So clearly we want to keep an eye on that, and hopefully they meet that 400,000 new member target this quarter and for the quarters going forward. The next key performance indicator we want to keep our eye on is products and members. Now, what do we mean by this? Essentially, we want to keep an eye on how many products or services each member actually is signing up for. SoFi Technologies operates off of a flywheel business model, so essentially once they bring a customer into their ecosystem and somebody becomes a member, let's say somebody just wanted a credit card with SoFi Technologies or a checking account or just to refinance their overall student loans. SoFi Technologies will say, sure, I can do that for you, come on in. Once they are attracted and brought in as a member, then SoFi Technologies will cross-sell them and upsell them on other products. Hey, I know you came in just for a credit card, but how about opening up a checking account with us? And while you're at it, why not refinance your student loans? And hey, while you're at it, you may want to buy a house now since you're a young high earner and you can afford it. So clearly they are going to cross-sell and upsell their members on other products in their ecosystem to continuously make money off of these members as time goes on. And this is going to be a huge performance indicator that I want to look at more. The next key performance indicator will be on how effectively the company is using their sales and marketing, and particularly in regards to how much they're spending to bring in new members. One thing that I would hope for is that SoFi Technologies continues to scale their overall customer count to where they are not spending too much money on sales and marketing and it grows more organically. There's nothing wrong with sales and marketing. I definitely welcome that for this particular company, but they don't want to spend too much money by just bringing in a member because this lowers their overall amount of money that they are making from each member. So hopefully they are using their marketing dollars very wisely. We want them to stretch those marketing dollars as far as possible to bring in as many people as possible for as cheap as possible. Next, we want to look at their overall deposits. And the author has covered in prior articles that for every $100 in deposits, SoFi is actually gaining around $1.25 to $1.50 worth of revenue on a yearly or annual basis. This is going to reflect very positively on their overall bottom line. And although that may not sound like a lot, when you are talking about billions of dollars, this clearly is adding up very quickly, and it's just making SoFi stronger as a company, particularly in regards to their finances. Another thing we want to keep our eye on is their Galileo accounts. A lot of Galileo's partners are neobanks and they're being hit very hard by the worsening macroeconomic environment. Clearly, we don't want Galileo's partners to lose interest into this technology or even SoFi to lose Galileo customers. So hopefully this particular segment isn't decelerating enough because Galileo over the last few quarters has experienced very impressive growth and hopefully that continues well into the future. The sixth key performance indicator that we want to look at would be their personal loan lending originations. And apparently this is going to be one of the first quarters where SoFi actually surpasses Lending Club in personal loan originations. This essentially means that SoFi is doing very well competitively in their overall space, and it's just saying that SoFi is superior in their personal loan lending originations. Normally, times of rising interest rates, we will see personal loans increase while other types of lending products decrease, mainly because people want to take on personal loans to pay off other forms of high interest debt. So the demand for this product remains very strong, and hopefully SoFi can keep up with it to just really give it to Lending Club and other types of competition. It means that they're doing very well and they are very competitive in this particular market. The last thing we would want to look at is their tangible book value. A lot of people use this metric to value different types of financial institutions. So clearly, if they have a strong tangible book value, this reflects positively positively on the overall fundamentals of the company. Lastly, the author highlights that a JP Morgan analyst actually started covering SoFi Technologies and he gave them a neutral rating. So overall, I would say these are some positive developments that we want to look out for in their upcoming earnings report on January 30th. In essence, lastly, we want to just keep an eye out if they actually beat expectations. These are more realistic numbers. I know in the first article we said that the company is supposed to bring in around $400 to $410 million. Honestly, that would be pretty catastrophic for this company. Ideally, we're looking at quarterly revenues around $425.7 million, which would equate to around a 49.05% increase compared to the same period a year ago. On top of that, the earnings per share should come in at a loss of 9 cents, which is also an increase by around 40% from the prior year. And of course, that date one more time is January 30th. So I will be coming out with a video dissecting their earnings report and performing some analysis when that eventually comes out. But for their earnings per share, we want to beat a loss of 9 or at least meet that particular forecast. And for the revenues, we want to meet that projection of $425.7 million. We don't want anything lower than these. If anything, we want the company to meet these or exceed these, and this could dictate where the future share price is headed. So with that update on SoFi Technologies, don't forget to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.